The read right now for the Wall Street Journal Global Economics editor, Fox News contributor, all-around genius, John Hilsenrath. John, what do you make of this? This is like bang, 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 crazy.
Right. On the China front, I think we're at a really important crossroads right here, because what the president did with his first $50 billion on China of tariffs was insulate American consumers. It was mostly industrial products that he was going after. And so you were in a position where either the Chinese or American companies were absorbing that in their profit margins. If he's going to go to $200 billion, and certainly if he's going to go to $400 billion, this is going to hit the core of what Americans consume from the Chinese. iPhone products, computers, clothing, toys, books, you name it. We import so much from China. If he's going to put these 10% tariffs on, it's going to hit American pocketbooks. And I think the president is going to discover, if he does this, just how far he can take this trade battle with the Chinese. If American consumers revolt, then he's not going to be able to push it so hard. But if they absorb that, if they accept that, then he's really got the Chinese in a corner, because they depend so much on, driving their economy through exports to America.
Yeah, and maybe that's a position of strength to which he alluded, obviously, with these business folks in Washington. And one of the things he has always echoed, and you and I have chatted about this quite a bit, this idea that the world needs us and all these other countries need us a heck of a lot more than we need them, particularly China. And there might be some proof of that. Our Charlie Brady, our stocks editor here, was studying a phenomenon that I did not know since all of this tussle began around the beginning of March. The Chinese markets have tumbled about 11 or 12%. We're actually, now haven't factored in today, we're up a little bit since then with all of that. So you could make an argument that they're more beholden to us than we are to them. What do you think of that?
Well, I think you certainly can make that argument, and the president has argued that the United States can't lose a trade war. Well, on a global basis, I don't know if I would agree with that.
I would never agree with that. I think you're right. I think that's very risky and arrogant strategy there.
It is, but, when it comes to the Chinese, I mean, the Chinese are now asking themselves today, all right, what can we do to retaliate? We don't sell so much stuff to them that they can up the tariffs that they're already putting on agricultural products or airplanes, but they just don't have as big a list to choose from as we do. The next step, I think, for them is, do they start making life difficult for all these American multinational companies that are doing business in China? Do we start finding out that they start failing health inspections or food inspections?
Well, you're already seeing some signs of worry there reflected in Ford shareholders. That issue down about 3%. Even some of the semiconductor makers that get most of their revenues from that neck of the woods, Qualcomm and NVIDIA. So there is a sense that maybe that is where they see the soft spot for Americans. I'm just wondering whether they ever hit the nuclear option, and that is start selling our debt.
Well, I think that's a really difficult proposition for them, because if they sell our debt, that means basically that means that they've got to start selling dollars. That weakens the U.S. currency and strengthens the renminbi. Again, their trade surplus is premised in part on having this currency advantage, and so I think they end up shooting themselves in the foot if they start getting rid of U.S. bonds. And, interest rates are very low right now. There are a lot of buyers for U.S. debt elsewhere in the world. I don't know if that's a winning proposition for them. The Chinese don't have a lot of great options in this environment. And I
mentioned that, buddy. I'm sorry to jump in, because we got news that Russia is slowly unwinding a lot of its positions in American debt. I don't think they're a very big player, but as if to say, hey, we can all tango here.
The other point that I should make is that the Chinese are in this in a moment when their own economy is slowing down. They had a debt bubble, and they've been trying to unwind all the borrowing that they did to keep their economy growing. They're not really in a great position to be getting into a trade war with their largest customer at a time when growth is slowing down. And when you think about the Chinese, in particular the Communist Party in China, their primary objective is economic and social stability. They value that more than anything. They don't want their economy to slow down a lot, because that leads potentially to social unrest.
Yeah, you would think cooler, rational heads prevail here, but this kind of can take a life of its own.
You know, I think you mentioned Canada at the outset. I think what the president is seeing is that he's got a real advantage in this situation with the Chinese. With Canada and Mexico, it's a little bit more complicated. You know, as you said earlier correctly, we are running a trade surplus with the Canadians if you count services in that.
Right.
And we sell a lot of agricultural goods to Mexico. You know, can we just tear up, and also a lot of our supply chains in the auto sector are tied to Mexico and Canada. I think we're discovering it's very hard to just tear up NAFTA and walk away. I think we might have more of an advantage in this negotiation with China than we do with Canada and Mexico.
Oh, that's very interesting. All right, I never looked at it that way. John, thank you very much. Good seeing you again.
Okay, thank you.